Hello, welcome to our class in Fundamentals in Accountancy, Business and Management 2, or simply Accounting 2. So, my greetings to all grade 12 students again all over the Philippines. And syempre, yung aking mga estudyante sa grade 12 Bonifacio, Magbanwa, and grade 12 Mabini. Okay, now we have a new lesson. It's the preparation of the statement of cash flow. Okay, uh, we already learned about the preparation of the statement of balance of financial position or the balance sheet, statement of comprehensive income or the income statement, statement of changes in equity, owner's equity, or yes, and now we have the statement of cash flows. These are the four major financial statements which are the outputs of our career of accountancy. Okay, so if we master this, wow, congratulations, my dear students, you are now ready. Okay, but first we need to master this statement of cash flow. When we say statement of cash flow, it means we are preparing an analysis of the movement of cash, that is the cash receipts and the cash disbursements, or the cash inflow or the cash outflow in the company. So when we say cash flow again, it is the movement of cash. Why cash? In our previous lessons, we discussed that cash is the most liquid of all the assets. And that is why we also studied that the arrangement of assets in the balance sheet should be in accordance to its liquidity. So we put cash on top because this is the most liquid, followed by the other accounts such as inventory, receivables, prepayments, uh, and other more assets. But we know that cash is the most vulnerable asset. That is why we need a very cautious management for cash. And we use cash for three major activities inside the company. First, we use it for operating activities. We use it for investing activities. We use it for financing activities. And what are these activities? Okay, these activities, the operating activities, includes the major revenue generating activity. For example, if your company is a trading company, so what is your major income generating activity? Yes, the trading or the selling of buying of goods and selling of goods. So that is buy and sell. Okay. So when we do buy and sell, that is the first part of the operating activity. That is where we generate income when we buy goods and then we sell them as is. Okay? So that is the operating activity. When we say investing activity, well, this talks about the purchase or the selling of non-current assets, so it would help us in the operation of the business. For example, we buy machine. What is this machine for? This machine will help the business operate faster or more effective and efficient. So when we buy machine, that is an example of an investing activity. Or it may also be when we sell machine. So when we purchase or when we sell non-current assets, so that it would help us or it would facilitate the operation of the business. Okay, next we have the financing activities. When we say financing activities, the main purpose of this is to generate working capital or to make additional capital or to raise money for working capital, so that this working capital would help in the financing of the business. So again, when we talk of financing activities, these are the movements in your equity accounts. So what are these movements? It may be when you make an investment, when you make a drawing account, so you deduct, okay, you deduct your equity account. When you make borrowings or loan to third parties. So in financing activities, there are two sources of your financing. It may be your creditors or third party creditors and your investors or your the owners of the business. Okay. Now, upon knowing all these activities, you will also notice that there are two approaches. There are two ways to solve the statement of cash flow. We have the direct approach and the indirect approach. Okay, as senior high school students, we will focus on the direct approach. But I will be also giving you an example of how to solve or how to formulate or how to prepare a cash flow statement using the indirect approach. Okay, so when we say direct approach, as we have said earlier, a cash flow statement includes cash transactions alone. So when we do the direct approach, we include here from the operating activities all cash transactions in the income generating activities, as we have mentioned, the sale of goods. What else? The purchase of of inventory. What else? When we pay our operating expenses like salaries, utilities, well, that's part of the operating activity. And what else? So that's it. Okay? So the operating activity plus the in the direct approach, we use the cash transactions alone. However, that is in the operating activity. But in the use of these two approaches, you only change the operating activity. The the financing and the investing do not change at all. Okay. But in the indirect approach, well, we start with the net income. Okay? We start with the net income account and we reconcile non-cash transactions to the net income. How is this possible? Because if you will notice, when a certain person would look into your income statement, okay, would you tell me that the net income in the bottom line of the report is the true cash that you receive from the trading company? Of course not. The net income, yes, it reveals the income or the loss of the business operation, but not all amount, but the figure in the income statement does not contain pure cash. It may contain non-cash transactions. So that's it. That is why we reconcile all the non-cash transactions to the income account, to the net income account. Okay? And the purpose of cash flow statement is number one, upon reconciling the real amount of cash, because we wanted to know how much is the real cash that we hold. Because when you get hold of, of an income statement and you read on your bottom line, net income of 1 million, it does not necessarily mean that your cash in the vault or your cash in the bank is 1 million. It may be lesser or it may be higher than 1 million. Why? Again, I'll repeat again, because of the non-cash transactions that may be included in the income statement. So, because we would want to know the pure cash amount, we would be able to identify able to identify the real amount of cash and how the movement of cash, or not really the evolution, but how the cash moved around these three activities: the sources and the uses of money. Okay. Then, upon knowing the real amount of cash that you have, you can now determine also your you can now manage also your liabilities, because in your balance sheet you will see a list of your current liabilities and non-current liabilities. Upon knowing your real amount of cash, you can now You can now manage your cash in such a way that you will know how to pay or how to allocate your cash to the maturing obligations in the liability section of your balance sheet. Okay? So that's the purpose of your cash flow statement. Then we have here, okay, statement of comprehensive income includes non-cash items, as I have mentioned earlier. Why? Because of the principle of accrual. In our accounting system, we are using the accrual system. What do you mean by accrual system? Well, it is recording transactions though you did not receive cash, or recording transactions though you did not pay cash yet. So that is why we have such accounts as accrued income and accrued expense. So what do you mean by accrued income? Accrued income means this is a receivable account. These are the income which were already earned by the company, but they did not receive cash yet. Okay? So this is a receivable account. So this is an income earned by the company, but no cash has been collected yet. And what is also an accrued expense? An accrued expense is an expense already incurred by the company, but they haven't paid yet. For example, the electricity. We pay our electricity later than the consumption date. Okay, so that is an accrued expense. And also we have here depreciation. Depreciation is an expense account which does not also require cash. Okay? So it decreases your income because it is an expense. It is included in the income statement, and under the income statement it is under the expenses, depreciation expense. So when you add your depreciation expense, what is the effect of your income? It reduces your income. So that is why the depreciation account is added back to your income account. Okay? Because your income is understated, or your cash account is understated by the depreciation expense. And also, you may also notice the allowance for doubtful accounts. It is a non-cash transaction. Okay. Next, we have, okay, I'm giving here an example of how to prepare a cash flow statement. I mean, the format of the cash flow statement. So there are three parts in the cash flow statement. First, the cash flow from operating activities. So again, what is the operating activities? It is the revenue generating activity of the company. So you will include here, or if you will notice, number one, cash receipts from clients, because this is the major revenue generating activity when you receive cash or cash sales from the customers or clients. Number two, when you pay your suppliers, of course. So if you want to purchase goods on account, later on you need to pay them again. You need to pay your suppliers. So payment of suppliers is deducted to the cash flow, and the payment to your people, or to your staff, or your salaries and wages for the people. So then we get the net cash generated from operating activity. Next, we have the cash flow from investing activities. Again, what is an investing activity? Well, an investing activity is focused on the purchase or sale of non-current asset to facilitate the business operation. Okay? So, an example of that in this example is the cash purchase of machines. So that is a deduction because you release cash. You disburse cash when you purchase. Okay? So next we have the cash flow from financing activity. What is a financing activity again? Financing activity is the activity in the business wherein the equity accounts are changed, or there are movements in the equity accounts, and there may also be borrowings, because we said earlier the purpose of financing activity is to raise working capital for your company. So where do you get your working capital? It may be from loan borrowings or from your creditors and from the investors, from the owners themselves. So here, you will notice that the financing activity is a cash payment of long-term loan. So, yes, there's the cash payment or cash receipt. Then we have here additional cash investment. Okay, then then the drawing account. Okay, so the drawing account. Then we have the net cash generated by financing activity. We get the balance of the three, from the operating, from the investing, and from the financing. Then we get the net increase in cash and cash equivalents. That's 2,600,000 plus your cash beginning. So this becomes your cash balance at the end. You will also notice that your cash balance beginning is normally the investment amount or the initial investment of the company. Or if whatever is stated in the problem, this is the beginning balance of your cash. And cash balance at the end, this is the ending balance of your cash at December 31 of your balance sheet. Okay. So now we have seen an example of the format of of the cash flow statement. And now let's try. Okay, this is now the totality of it. A while ago, I divided it into portions because the texts are very small. But now, if you want to see the whole portion, the whole body of it, it looks like this. The red is the operating activity, the green is the investing, and the blue is the financing. Okay, so next is, okay, now let us prepare the cash flow statement of ABC Company given the financial statements, balance sheet, and income statement. Okay, from this income statement and balance sheet, we can prepare a cash flow statement, but we need a little analysis. Okay, so you will notice that the income statement starts with the sales and ends with the net income. What are the composition inside? So you know already, beginning, purchases, etc. Then we have the assets also. Okay, take note, I encircled the cash balance at December 31, which is 6,995,000. That means your cash balance at the end, when you prepare your cash flow, must be equal to this amount. Okay, so that's it. Then we have the liabilities and the owner's equity sections. Now we will prepare the cash flow statement. Again, it starts with the operating activities, cash sales. You will notice that the cash sales here is 5 million. Why 5 million? If you will see in your what's this? In your in your income statement, it says 5,500,000. Okay? But if you will try to read more, to read on the financial statement, because it is 5,500,000, that means there is a 500,000 accounts receivable. So let's look into the balance sheet. Is there an accounts receivable? Yes. See, there is an accounts receivable of 500,000. So we are correct in the assumption in our answer that the cash sales is only 5 million, not 5,500,000, because there is an accounts receivable of 500,000. Then we have here cash purchases of merchandise 250,000. Where do you find the purchases? Correct, in the income statement. Okay, let's see. Do we have purchases of 250,000? Okay, it must be in the income statement. Okay, the purchases here says no, it's not 250 but 500. So that means 500,000 purchase must be on account and the other part is on cash. So let us look if there is an accounts payable for 250,000. So where do you find it? In the balance sheet. Is there a liability account of 250? Yes. Yes, we have here an accounts payable of 550, but we are only looking for 250. Let's jot it down. Let's take note of the 250,000 accounts payable for purchases. And then let's continue. Uh-huh. Okay, where are we now? Here. I think this is it. Okay. Now we have here payment of rent expense 20,000, payment of interest expense 210,000. Where are we supposed to find that? Correct, in the income statement. Okay, the income statement here says, okay, let us see. All right, that is correct. There is a rent expense of 20 and an interest expense of 210. So we are correct. There is nothing to reconcile. Sorry. Okay, so we are correct in the in the interest, and but we have still a problem in the, what's that? In the 250 purchase, okay? Because in the income statement it says 500, but we found already that there is an accounts payable of 550. So I think there is again another okay. Now let us look into the investing activity. If you will look to your balance sheet, there is an acquisition of asset. Okay? But when they bought the machine, it must be on account. Why? Because if again, you will examine again the accounts payable. See, the accounts payable is 550. And our accounts payable for the purchases is only 250. So that means that 300 missing amount there is for the machine. So now we were able to find out. So this is correct. Accounts payable is 550 because that is what is stated in the balance sheet. But now, we can now determine that our purchase for merchandise is indeed 250 because 300,000 belongs to the purchase of machine on account. Okay, so now we are now getting it right. Then from the financing activity, we will notice a bank loan proceeds of 3 million and a drawing account of 25,000 and a payment of the loan of 3 million. Let us look in the balance sheet if it is reflected, if it is really correct. Right. So here, there is in the balance sheet, there is no more loans payable, meaning the 3 million was borrowed on the same year, but it was paid before the end of the year, so it's not anymore shown here. But we still have another account that is, sorry, that is, so this is correct, 3 million loan proceeds, but it was paid again, so it offsets itself, 3 million and 3 million. But there is a drawing account of 25,000. Where do we find that? Of course, in the balance sheet. So there is a drawing of 25,000. And also, we have done already the income statement. So the income statement here shows how much is the income? 4,380,500. So you will use that in your balance sheet. So we put it here in the balance sheet, 4,380,000. So now we have a total equity of 7,255,000. Now we're getting it right. So everything is correct. 3 million. So we have a net cash generated by financing of 4,195,000. So the cash balance of 2,500,000 is the correct answer because the balance is 6,695,000 at the end of December 31. So are we correct? Yes, perfect. We're doing it right. Now, before we end, I'm leaving you an example or an activity to do, to perform at home. And let's try doing it following the same procedure. Okay? If you, the other example that I gave you, we made the analysis through the balance sheet and the income statement without any information given. But here it is much easier because the information is given here, and then you have to solve the journal entries, ledger, trial balance, statement of financial position, comprehensive income, and cash flow statement. You might wonder, Mom, why is it that we need to be always to be always start our activity with the journal entries, etc. Because you are still studying, you are still students. Once you have mastered everything, you can just imagine in your thoughts what type of transaction moved. But now, because you are just studying the cycle, I want you to start from the beginning to the end, so that in this way you will be able to master, and you will be able, as when you become accountants, you will now imagine those figures without any more need of writing them. Okay, so there is an adjusting entry of 10,000. Okay, so now that's all for today, and congratulations for being able to finish the activity. And if you finish activity 7, wow, good luck. ABM, again, this is at your service, ABM with Teacher Jonna. Thank you so much, and God bless everyone.